the Motley Fool Money radio show. I'm Chris Hill, and joining me in studio this week, senior analysts Aaron Bush, Matt Argersinger, and Ron Gross. Good to see you as always, gentlemen.
Hello. Hello.
We've got the latest headlines from Wall Street. Legendary investor Howard Marks is our guest, and as always, we'll give you an inside look at the stocks on our radar. But we begin with the big macro. The jobs report for September put America's unemployment rate at 3.7%, the lowest it has been since 1969. Wages continue to tick up, and something we don't talk about that often, Ron, 10-year Treasury bonds hitting a 7-year high.
Should we say it? Should we give them a firing on all cylinders for the economy?
I think we need to.
It's pretty impressive. 4.2% GDP, as you said, lowest unemployment since 1969. We have the S&P 500 up 8.5% as a result. That's not including dividends. You add on those, you've got a 10% year, all things being equal. Now, not everything is always rosy because there's two sides to every story, and you worry about inflation when things are so good. Inflation's at about 2.7% now, a little bit higher than the Fed's target of 2%, but that's actually being rethought because perhaps it's kind of an arbitrary number, and maybe it is a bit too low. The interest rates you mentioned are actually a negative. Markets trade down on the highest interest rates, so we did see the markets trend a little lower as a result of higher interest rates. But overall, you know, we robbed Peter to pay Paul a little, I think, with these tax cuts, and we'll see what happens down the road. But for today, for now, things look pretty strong.
I agree with Ron. I'm really paying attention, though, to those hourly wages, because that 2.8% increase, you know, certainly not barnstorming, but I think watching that going forward is going to be important, because that's really a major determinant of inflation. If we do finally see a lot of wage pressure, that's what's going to bring the inflation. And you saw the 10-year yield hitting a 7-year high. I mean, there are important implications to that. Ron mentioned it, but as an anecdotal example, the interest rate on one of my rental properties just got adjusted. It's a 3-3 arm, so the interest rate adjusts every 3 years. Last month, it climbed a full percentage point.
Wow.
And so, believe me, I'm feeling that. And I think a lot of people, you know, around the economy who have loans like that or dealing with that, they're going to be feeling that as well.
Yeah, speaking of wage pressure, Aaron, Amazon applying some pressure on the competition this week when Amazon announced it was raising its hourly wage to $15 and encouraged others to do the same.
Man, they're just playing chess. It's pretty amazing to watch. Yeah, I mean, they're just giving politicians what they want, and then they can go do their own thing that others cannot copy them at.
Ron, when you look at the 10-year Treasury bond, the 7-year high, I mean, we're a show that's focused on stock investing, but how much higher does this need to climb before you start thinking about bonds in a really serious way?
A little bit more. We're not there yet, but it does even affect. I don't want to nerd out on anybody, but it affects the discount rates you use when you value equities. So the higher the interest rates, kind of the lower the present value of future cash flows are, and that actually lowers value when you run the numbers. In addition to, and in conjunction with actually creating competition for stocks when other investable assets become more attractive.
Right. I mean, it's just the relative attractiveness of stocks goes down as yields go higher. And that, for us foolish investors long term, it really probably doesn't matter that much. But it does matter for institutions who are moving around a lot of capital. So I think that's why you're probably seeing a little bit of volatility come back to the stock market this week.
This week, Bloomberg reported that a secret division of the Chinese military has used tiny computer chips to compromise the motherboards of major U.S. tech companies, including Apple and Amazon. And Aaron, I should point out that both Apple and Amazon have denied this report. This is one of those interesting things that could possibly get interesting in an ugly way.
Yeah, I mean, it's a pretty crazy story once you dig into it. And so what these microchips allegedly do, and they're so small, they're like the size of a grain of rice. Like you have to allegedly, like it, you know, like
they're allegedly the size of a grain of rice.
Well, we'll see. But I mean, what they allegedly do is spy, but also allow for like changing the operating system on the computers that they're attached to, which opens the door for potential software attacks. And so if you think about this going on and these, you know, these tiny microchips being placed in some of the largest like motherboard suppliers that go all over the world, yeah, I mean, some of that stuff could be widespread already in a lot of our computers and servers. And it's interesting to see, you know, Amazon, AWS, for example, deny this. And so I think there's definitely a lot of investigating going on behind the scenes right now. So it's going to be really interesting to see what comes up with that. And if earlier in the year when ZTE got smacked for violating U.S. trade laws, if anything even remotely to that comes up here, it could cause pretty big shifts in like the technology supply chain, moving things out of China, just much further oversight. Yeah, it'll be really interesting to watch it unfold.
Well, and one of the potential ripple effects here is probably if manufacturers start to move out of China, presumably, Maddie, they're moving to places that are more expensive, and those costs probably get passed on to the consumer.
That's right. I mean, the one scary part of this to me is that it just seems so logical that we haven't really thought of this, a possibility like this in the past, just because we have been so dependent on China for manufacturing. And so, yeah, taking it out of China, of course, is a possibility from this. But man, the margins that companies like Apple have been enjoying for decades could be a lot tighter.
Another roller coaster week for Tesla shareholders. Shares of Tesla were up big on Monday after Elon Musk agreed to a settlement with the SEC. The deal included tens of millions of dollars in fines for both Musk and Tesla, a requirement that Tesla add 2 new independent directors, and a 3-year ban on Musk serving as chairman of the board. But the stock fell later in the week when Musk took to Twitter once again to mock the SEC, calling it the Short Seller Enrichment Commission. Maddie, someone has got to take this guy's phone away.
Take it away. Take the Twitter account away. I don't get it. I mean, I really thought, and I need to stop believing that this is going to work out logically. But I mean, I just feel like after this settlement, this is a great time for Musk to just step back, accept it. You know, he's going to pay this fine. In my mind, he got off. I mean, the SEC's original lawsuit was for him to be banned from serving as an executive on a publicly traded company. And by the way, I don't know if Elon knows this, or I'm sure his lawyers do, but a federal judge still has to accept the settlement. So in fact, he could have put that in jeopardy if the federal judge decides that, well, the settlement, there was questions about the settlement anyway, but now you have Elon Musk essentially ridiculing the SEC and possibly the settlement. If this doesn't go through, I think it's very possible that Elon Musk could eventually not be serving as the CEO of Tesla.
Yeah, the exact thing that Tesla needs, besides a better balance sheet, is a strong chairman or a strong number 2, a la Sandberg at Facebook. Whether he can relinquish control and not install a puppet chairman remains to be seen. And I think we're setting ourselves up for a big fight sometime within the next 3 years between Musk and whoever that new chairman is, with the end result possibly being Musk leaving.
Honestly, I'm just tired of the shenanigans, period. Like a lot of it is Musk's fault. A lot of it isn't, too. But, I mean, there are interesting developments going on behind the scenes. For example, last month, the Model 3 was the highest grossing car in the U.S. Like, we don't see those headlines because all we see is, like, Musk and SEC headlines. But there are interesting things going on here. And it's really important for Tesla to, contain the narrative so that they can improve their balance sheet and do things like that. And it's just crazy how hard it is to just keep his mouth shut.
Well, that's the thing. He's a smart guy, and you would think, Maddie, that the best way to shut up the short sellers is to put up more numbers to celebrate those types of actual business wins.
That's exactly right. I guess I just don't know when Musk woke up one day and decided that this is the day from now on I'm going to go to war with my critics. And anyone who criticizes me or my company, he just doesn't have to do it. And I know a lot of the headlines, a lot of the media has been a little bit unfair against Musk, but again, he's creating his own problems.
Costco's fourth quarter results were pretty good, but shares down on Friday. Wall Street, Ron, seemed more interested in Costco's warning about a material weakness. What is all this about?
Yeah, as you and I were talking before the show, anytime we see material weakness in a headline, we get a little nervous. But I think this is much ado about nothing. They've identified a problem with their financial reporting where some of the company's information technology department and maybe some outside contractors had access to the financial control system at Costco. But it doesn't appear to have affected anything. And the company doesn't doesn't think any kind of misstatements will be necessary, although they need to complete their review. I think in the end, this shouldn't happen, and they should be more careful, but it probably has no real effect. So therefore, we can go and just focus on the actual results of Costco, which are pretty strong, with comp sales of 9.5%, up 9.5%. They're saying in-store traffic is as strong as it's ever been, up 4.9% for the quarter. The one area of concern is online growth. The ever important online growth in the age of Amazon is actually really decelerating, 26% versus 36% in the previous quarter. Something to keep an eye on. But profits were still up 14%. Company's doing real well. Stock's not cheap right here at around 30 times versus something like 15 times for Target. But the company's putting up solid numbers.
I mean, there's not really a good time to have problems with your financial controls, but particularly as we're heading into the all-important holiday season, it would seem like they want to get this behind them as quickly as possible.
For sure. I think from a technology perspective, that's not hard to do. The review may take a little longer to see if they need to restate anything or if any breach really impacted anything. I think in the end, though, everything will be fine.
We're coming to Denver. We are having a listener meetup in Denver, Colorado on October 23rd. So if you're in the area, we want to see you. Email us, radio@fool.com, and we will give you all the details. Spotify has 180 million monthly active users, and if you think that's impressive, you're going to be interested in the upcoming IPO for Tencent Music Entertainment. The company filed to go public in the United States with one of the key data points, Aaron, being that Tencent Music has 800 million monthly active users in China.
Not bad at all. So Tencent Music is essentially a holding company for 4 of China's largest music services of various types. And yeah, 800 million monthly active users is crazy, and it still is growing pretty quickly. And this is in China and also just in the greater Asian area anyways. And so, yeah, it should be a pretty massive IPO. What's interesting about the company, to me, besides just its obvious dominance and the fact that it's growing quickly, is how it makes money. So instead of relying solely on subscriptions and advertisements like a Spotify, Tencent Music actually makes most of its money from virtual gifts sent through live streaming. Live streaming has been like a big, trend in China lately, but it seems like Tencent Music is in on it too. Also, online karaoke is a big revenue driver, and song sales. So this is a very different type of music company than we see here domestically, and they also are more profitable too, with gross margins higher than what we would see in a Spotify here too. So it'll be really interesting to see how this company does once it's public.
Tough week for Stitch Fix. Fourth quarter revenue for the online apparel company came in 23% higher than a year ago, but Wall Street was looking for more, and shares of Stitch Fix down 40% this week. Maddie, is that an overreaction? Because on the surface, it kind of looks like one.
It does look like an overreaction to me, but you have to go back to the previous quarter where revenue was up 29%, active clients grew 30%, and that got investors excited. The stock was up 40% from that quarterly announcement. So going into this one, and then certainly, as you mentioned, revenue was just up 23%. Active clients were up 25%. So that's quite a sharp deceleration. And I think a company like Stitch Fix, which obviously, like a lot of growth companies, was given a pretty high valuation going in. At the same time, I look at the stock now after the drubbing it's gotten this week, and you have a business that still growing about 20%, maybe 20 to 25%, trading for about a little over 2 times sales. And it's profitable. And this is a business that I know, for one, David Gardner's really excited about, and Tom is excited about as well. It's an interesting kind of a disruptor in the apparel business. So it's one I'm kind of interested now that, of course, it's down 30% from its high.
Yeah, I think the concept of what they're doing is fascinating. They're essentially a data company that happens to sell and deliver clothes, right? But I think they're finding that it's not that easy to keep the momentum going. So for years, Stitch Fix pretty much just relied on word of mouth marketing in order to grow its brand, grow its revenue. And now, even though it is the top dog, there's more competition than there's ever been. So they're having to pay up more for customer acquisition than they've ever had to do before. So I think we're starting to see some of those issues kind of appear in the financials. And retention isn't awesome either. So they do have issues to work with, even though it's still a really interesting idea.
Shares of Barnes & Noble up 20% this week on the news that the iconic bookseller is putting itself up for sale. Ron, they've tried this 2 other times this decade. Do you think the third time?
Third time's a charm? Is that what you're saying to me? Oh, we'll see. They supposedly received interest from multiple parties, including Chairman Leonard Riggio, who owns 19% of the stock. And I think they think this is real. They've put a shareholder rights plan in place, which is commonly known as a poison pill. So if an unsolicited investor tries to take the company over, they can kind of thwart that if they need to. It'll be interesting to see at a market cap of $500 million now after the pop. What is this thing worth, and who would want it, especially in a situation where their online sales, again, the all-important online sales, when you're going up against somebody like Amazon, has been declining. But, they did do $100 million of EBITDA in cash flow in the last year. So you throw a 5 or 6 or 7 multiple on top of that, if you so choose to, and you can make money off of a purchase of a $500 million market cap. So maybe folks see the ability to firm this up a bit. They've had 5 CEOs, since 2013. They need to, get things in order. But maybe there is some money to make here.
Do we feel like books are back? I mean, I'm saying like non-Kindle, non-ebooks. I feel like maybe it's anecdotal, but I feel like I've seen more people who are in bookstores buying physical books and enjoying that experience more than Kindle.
Yes, and part of that is a rise in independent bookstores as well.
Right.
2 years ago, Tribune Publishing announced it was changing its name to Tronc, which stood for a combination of Tribune and online content. This week, the company announced it is changing its name back to Tribune Publishing, although the company did not say why it was changing back.
They also didn't say who was fired for also originally coming up with the Tronc name.
I mean, do we think the change back to Tribune Publishing had anything to do with the massive amount of ridicule that this show and others gave them?
I don't know. The name, where were they years ago when they were in a room and someone raised their fist and said, Tronc? Did they all get excited about that? Because I tell you what, I think collectively in the world was like, what? What is that?
Well, and one more thing that, not that Reed Hastings at Netflix needs more things to feel good about, but one more thing that he can feel good about is when they had the Quickster debacle, they changed course on that very quickly.
Yeah, it's no Mondelez. So compared to Mondelez, everyone's like, yeah, we'll go with Tronc. We'll give that a shot.
Hey, Mondelez is still Mondelez.
It's true.
They haven't changed it back. Let's go back to our man behind the glass, Steve Broido. Steve, you're a proud son of Chicago. Are you happy that Tribune Publishing is back?
I think so. I think it's a good thing. I mean, in Chicago, it was either the Sun-Times or the Tribune. So you pick your poison here. And I always like the Tribune more.
Let's go back for a second to Tencent, because when Aaron Bush was talking about the online karaoke, I thought of you, Steve. You're a singer.
I'm doubling down on that.
Are you? Is there a go-to karaoke song that you have if you really need to kill it, whether it's online or in-person karaoke?
Usually, Cheap Trick usually does the trick.
That's a good one. Can you give me an example of a virtual gift? What does that even mean?
So, yeah, it's essentially a way of tipping, but I don't know. It could just be like, you like how this person sings, and so you'll give them like a nice little digital sports car.
And Tencent gets a cut of that?
Yeah, and they take a healthy cut, and it's just pure profit.
Guys, it's our 500th episode.
Wow!
Can you believe we've been doing it this long?
That's awesome.
That's amazing.
It's incredible. Aaron Bush, I think, was in middle school when we started doing this.
Yeah, I was like 12 years old. And I was a listener, though. I was a listener.
That's awesome.
For Chris, is it any coincidence that Tom Brady happened to throw his 500th TD pass last night? I don't know. It seems so. It's perfect.
I think it is. Let's go to our man behind the glass, Steve Broido. He's going to hit you with a question as we get to the stocks on our radar. And Ron Gross, you're up first. What are you looking at this week?
All right, this is just a radar stock for me. It's a recent recommendation by Fool analyst Mike Olson, and it's KKR, Kohlberg, Kravis, and Roberts. Some of you may remember it as, and the ticker symbol is KKR. One of the world's top private equity investment managers, really remarkable long-term track record. Employees own more than 40% of the stock. I like to think shareholders and employees are nicely aligned there. Stock is $27 a share. My friend Mike thinks it could be worth $36 a share, and it has a 2.4% dividend yield at the moment. So it's something I'm taking a look at.
Steve, question about KKR?
How do I evaluate a company that's business is owning and managing other companies?
Based on that track record, what kind of after-tax and fee returns are they putting up for their investors?
Aaron Bush, what are you looking at this week?
So my stock is WWE, ticker WWE. So I think we're doing, there's a train there. I hope Matt doesn't ruin it.
I'm going to ruin it.
So I took a look at this stock recently and I was really impressed. So first of all, I didn't realize just how huge and growing this brand was. So the numbers it generates on TV are impressive. It upsells to its network really well. It's one of the most popular YouTube channels in the world, and its toys sell better than Marvel and Star Wars.
What?
Yeah. But what blew my mind the most was in June, they renegotiated or renewed their domestic TV rights for 3.6x the rate at which they were doing before. And so that's a snap your fingers instant multi-bagger moment. And so they're continuing growing overseas. They got new contracts up for renewal. I have a feeling we're going to see more moves like that, and the explosiveness isn't over.
I had no idea wrestling toys were selling like that.
Yeah.
Steve Broido, question about WWE.
Do pay-per-view experiences still happen? I haven't heard about pay-per-view in years.
It still exists, but they largely have shifted away to the network, where they have about 2 million subscribers for about $10 a month.
Matt Argersinger, what are you looking at this week?
I'm looking at Vail Resorts. The ticker symbol appropriately is MTN. I love this business. I've owned it for a long time. Of course, owns some of the most irreplaceable assets really in the country. Vail, Breckenridge, Park City, Stowe, to name just a few. This stock rarely goes on sale, but it's currently off about 15% from its recent high and now yields 2%. That rarely never happens with this company, so I'm very interested in right now.
Steve? Vail Resorts?
Where's the money in skiing? Is it the rental? Is it the renting of the boots and the skis? Where's the money come from?
Well, the skiing, they make money from skiing, but obviously that can be very seasonal and cyclical. But yeah, the resort, the amenities, the restaurants, the hotels, the activities, all that stuff around skiing makes them a lot of money.
And the goggles. Don't forget the goggles.
The goggles.
Vail Resorts, WWE, KKR. Steve, you got one you want to add to your watch list?
I may take a look at KKR.
Woo-hoo.
All right. Ryan Gross, Aaron Bush, Matt Argersinger. Guys, thanks for being here.
Thank you, Chris.
That's going to do it for this week's edition of Motley Fool Money. Our engineer is Steve Broido. Our producer is Matt Greer. I'm Chris Hill. Whether you just started listening or you've been with us from the start, thank you for listening. We'll see you next week.